Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about the alarming decline in the value of the ruble. Now, if you follow the channel, you'll be aware that Russia has severely limited the amount of data that it's releasing to the wider world. It doesn't really want anybody to know what's going on in the economy. And the key metrics that we're now having to focus in on are things like inflation, interest rates, and the value of the ruble. Now, as I've talked about before, the value of a currency usually is directly linked to the strength of an economy. If your economy is doing really well, if it's buoyant, then lots of other countries want to trade with you. Therefore, the demand for your currency will be high, and that should increase the value. And equally, if your economy isn't doing well, if nobody wants to trade with you, nobody wants to buy your currency, then demand will fall, and therefore the value should also fall. So that's broadly speaking what should be happening. However, the situation with the Russian ruble is slightly different because over the last 2.5 years, the central bank on occasions has been buying rubles in the markets to keep the value up. So this is referred to as market manipulation. If you're trying to keep your exchange rate at a certain level, that's artificial compared to what the market would let it float at. Now, over the course of the past few months, what we've seen in Russia is that the Russian central bank has come under pressure in terms of its cash flow, and therefore it's no longer able to keep buying the rubles at the same level. And we've seen the value starting to drift. I recently posted a video talking about the fact that the value of the ruble against the US dollar had traded up to 92, which was one of the worst rates that the ruble had been trading at for a long time. However, over the course of the past 7 days, we've seen a rapid deterioration in the value of the ruble, and it's now trading in excess of 94 against the US dollar. Now, you might be sitting there thinking, hang on, who cares about the US dollar? Russia isn't doing any business in dollars. It's only dealing with China and India. And that isn't quite true because a lot of deals are still being done in dollars. However, Russia's two biggest trading partners are definitely China and India at the moment. And unfortunately, from the ruble's point of view, it's deteriorating at exactly the same rate against both the Chinese Yuan and the Indian Rupee. So in today's video, we'll go through the details as to what's going on with the Russian ruble. We'll talk about why it's now deteriorating at such a rapid rate and what the implications of this are for the Russian economy in terms of imports, exports, and the accounts for all of the Russian businesses, because Russian companies are still having to report all of their profits or losses in Russian rubles, so they're needing to convert things into rubles to show those figures. And also, a lot of those companies, although they're trading in international markets, so they might be being paid in Chinese Yuan and Indian rupees and maybe dollars, they're having to convert those dollars and rupees and yuan into rubles because there's a rule in Russia telling them that they have to do that. And so that's having an impact on those businesses. And then finally today, I'll wrap up with my summary as to what I think is going on with the ruble, what's likely to happen over the course of the next 3 to 6 months, and what the impact of all of this is on the Russian economy. But before we get started on all of that, I'd like to say thank you so much to everyone that's supporting the channel. If you're a long-term supporter, either through Patreon, where you can get early access to my videos and watch them advert-free, or YouTube membership or Buy Me a Coffee membership, thank you so much for that long-term support. Really helps to keep me motivated. And if you've bought me a coffee or sent me a YouTube super thanks recently, thank you so much for the time and the effort and the generosity. Really means a lot to me. This chart shows the movement in the exchange rate between the Chinese Yuan and the Russian Ruble over the course of the past 12 months. And what I'd like to focus in on this chart is what's been happening over the past 3 months. If we look at the situation on June the 19th, 2024, at that stage, one Chinese Yuan was trading for 11.4 Russian rubles. However, as you can see from the shape of this chart, over the past 3 months, there's been a rapid deterioration in the value of the ruble. And today, one Chinese Yuan is trading for more than 13.5 rubles, which represents a fall in value of 18% in the ruble in the last 3 months. And this is now a major concern from Russia's point of view, because 1/3 of all of Russia's exports are going directly to China, and Russia is sourcing around 40% of all of its imports from China. So this represents a huge amount of trade from Russia's perspective. And if we expand the scale of the chart to show what's been happening over the past 25 years, you can see that the current exchange rate for the ruble against the Chinese Yuan is one of the worst in the ruble's history. This chart shows the exchange rate of the Indian rupee against the Russian ruble over the past 12 months. And once again, if we focus in on what's been happening over the past 3 months, on June the 19th, the Indian rupee and the Russian ruble were trading at parity. It was a 1-to-1 ratio. And if you look at what had been happening over the previous 9 months, you can see that the ruble had actually been strengthening against the rupee. However, if we now talk about what's been happening over the past 3 months, there's been a rapid deterioration in the value of the ruble. And one Indian rupee is now trading for almost 1.3 Russian rubles, which represents a fall in the value of the ruble of around 13% in the last 3 months. And if we expand the scale of this chart to show what's been happening over the past 25 years, you can see that the current exchange rate is one of the worst levels that the ruble has traded at in its history. This chart shows the exchange rate between the US dollar and the Russian ruble over the past 12 months. And once again, if we focus in on what's been happening over the past 3 months, on June the 19th, one US dollar was trading for 82.7 Russian rubles. Today, it's trading for more than 94.3 rubles, which represents a fall in value of the ruble of over 13%. And if we zoom in and have a look at what's been happening over the past week, you can see that there's been a rapid decline in the ruble. So why has the value of the ruble fallen so significantly over the past 3 months? And why is it accelerating now? Well, the main reason is because the sanctions that have been applied against Russia were increased in June. The USA issued a warning to all financial institutions that if they were found to be dealing with Russian counterparts, then those financial institutions would themselves be subject to sanctions. Basically, they would be hit with exactly the same sanctions as were being applied against Russia. And this sent shockwaves through China and India. Those financial institutions didn't want to run the risk of being hit with the sanctions because Russia only represents a very small amount of their global trade. From China's point of view, it's around 2%. So that means that 98% of all of China's business is being done with other countries. So the last thing that China wants to do is gamble 98% of its income on 2% of its revenue from Russia. So what that's resulted in is Chinese financial institutions have now introduced further compliance. They've got levels of checking that they never had before any payments are allowed to go to Russia. They need to get a full list of all of the Russian counterparts, all of the different companies and individuals involved, and then check all of them against the sanctions list to make sure that nobody is going to cause them a problem. And what that's meant from Russia's point of view is that they're not being paid. So they're still shipping large amounts of oil and gas and other commodities to India and China, but they're not actually receiving the funds because the institutions in India and China are very, very cautious before they'll allow any money to leave the country. And so Russia is now hitting a cash flow problem. And that's now causing a problem from the central bank's point of view, because previously they were supporting the value of the ruble, stepping into the markets and buying rubles to keep the value up. But that costs cash. You need to have real money to be able to do that. And as the money has started to reduce, they've struggled to be able to do it. And that's one of the reasons why we're now seeing a rapid deterioration in the value of the ruble, alongside the fact that nobody's actually wanting to deal in rubles. So demand is currently at an all-time low. And this represents a major problem from Russia's point of view because it's still doing lots of international trade, lots of imports and exports. And all of the companies in Russia have to report their trading in rubles. Now, in terms of discussing the impact of the fall in the value of the ruble on the Russian economy, let's talk about imports. So there are a lot of companies in Russia that are importing goods. They're buying things from all around the world and then selling those things to other Russian companies or Russian consumers. That's the way the global economy works. You can't produce everything yourself, so therefore you import things. And a good example of that would be an iPhone. That not everybody can produce an iPhone because only Apple can. If you want to buy an iPhone, you have to source that iPhone from an official Apple source, and therefore you have to be able to import it. Now, obviously, that's not a great example because Russia is facing lots of sanctions with regards to trade with America, but I'm sure there are still lots of businesses in Russia that are importing iPhones in the grey market. So that price of that iPhone is set in US dollars. So if the value of your currency falls, it means that in relative terms, the the cost of that iPhone goes up to your consumers. So if we take a really simple example of $1 being equivalent to 84 Russian rubles, and let's say the iPhone was priced at $1 just to keep it super simple. So in Russia, that iPhone would be selling for 84 rubles because $1 equals 84. When the value of your currency deteriorates to the current level of 94, it means that that $1 item is now selling for 94 rubles rather than 84. So it's gone up by 10 rubles, despite the fact that the actual price in the international markets hasn't actually moved. It's still being sold for $1. So that means that everything that you're importing becomes relatively more expensive for all of the people in your country because they're all using rubles. Unless they can start getting their hands on dollars and buying things in dollars, they are forced to use rubles, and therefore the price of everything goes up. And that's one of the reasons why we're seeing a rapid increase in inflation in Russia right now, because the ruble's fallen in value, and so the cost of all of these imports is going up. And what that does from the company's point of view is it puts a lot of pressure on it. So if you're importing a huge amount of goods and they're all being priced in US dollars, all those goods are becoming more and more expensive in rubles. So you have a choice either of trying to pass on the full amount of that increase to consumers by just increasing it at the full rate, or you can absorb some of that fall in the value of the ruble and then sell your products at a relatively lower price. So what that would mean is that you are having to cut your profits. And that's what's happening to Russian companies at the moment. They're having to sell things at a lower margin. They're still increasing the price to a certain extent, but they're having to reduce their margins so the prices aren't quite as eye-watering as they would be if you passed on the full deterioration of the value of the ruble. And so Russian companies are struggling right now, not just from being able to source all the products, and that's a problem for them because of the sanctions. They're limited in terms of where they can buy things, but also because of the fall in the value of the ruble, they're under pressure, their margins are falling, and therefore their profits are falling. So the fall in the value of the ruble is really bad news when you're talking about importing goods. Now, in terms of exports, the fall in the value of your currency can actually represent an opportunity for some businesses. So if we take a simple example using the numbers that we've just been using, if you're a company in Russia and you produce a product that costs you 84 rubles to produce, if you're selling that in the international markets, that would have sold 3 months ago for $1 because the exchange rate at that point was 84 rubles to $1. Now, the exchange rate today is 94 rubles to $1. So that would mean that if you're still producing that same item and it's costing you 84 rubles, you could sell that in the international markets for 89 cents. So the price would have fallen by 11 cents to anybody that wants to buy it in the international world. So potentially, because the price has gone down, that means that you might sell a higher volume, you've become more cost competitive, and therefore you might receive more income overall that you've sold a higher quantity at the same price in terms of rubles. However, the problem that Russian businesses have is that, as we've just discussed, nobody's actually dealing in rubles. The contracts that are being signed with China and India aren't being signed in rubles, they're being signed in Chinese Yuan and Indian rupees. So the price is being fixed in the external currency. So if we take a simple example, if historically Russian businesses were selling that same item that they were producing for 84 rubles for $1, and that contract was for a purchase order quoted in US dollars, then the price would remain at $1 irrespective of what happens to the ruble. So the Russian business would still be paid the same amount of US dollars or Chinese Yuan or Indian rupees. It would convert to more rubles. So in the home market, the exporting company would actually make a higher profit in rubles. However, if it's having to buy its raw materials and other things in US dollars, it faces the same problem as the importing businesses, that those rubles are worth less in US dollar terms as the value of the ruble falls. So I don't think we're seeing a big impact in terms of Russia's exports becoming relatively cheaper in the international markets. The price is staying the same. Russian businesses may be reporting slightly higher profits in terms of rubles. However, their international costs are going up at an accelerating rate due to the falling value of the ruble. So there's no real net gain from the Russia's exporters' point of view because most of their contracts are being quoted in foreign currencies, not in Russian rubles. One of the other problems that Russia is now facing is that it's building up large reserves of foreign currency. because of the fact that all of the companies that are exporting things to India and China are being paid in either Indian rupees, Chinese yuan, or United Arab Emirates dirhams, Russia is building up a huge quantity of all of these different currencies. And this is one of the reasons why the ruble is now continuing to decline in value, because there's very little demand for ruble. As I said right at the start of today's video, nobody really wants to deal in rubles anymore. It's only Russia who's trying to encourage other companies and countries to do it, but nobody actually wants rubles. And a lot of banks won't trade in rubles because of the sanctions that are applied against Russia. So Russia's building up these huge foreign currency reserves. It's doing trade with India and China and other countries to try to get rid of those different currencies. But the problem that Russian businesses have is that President Putin introduced a law saying that they had to convert 85% of all of the revenues that they were receiving in foreign currencies back into rubles. And this was in an effort to try to keep the demand for rubles up. But if you're a company that's actually doing international business, if you get paid in Chinese yuan and then you need to buy things from China, you want to use that Chinese yuan to make those purchases. What you don't want to do is convert it into rubles, and then when you make those purchases in the future, have to convert those rubles back into Chinese yuan. Because as we've seen, as the exchange rate falls, you'll lose out. Because if you convert at the previous rate 3 months ago of $1 to 84 rubles, and then you're converting back at a higher rate of 94 to $1, then you're losing on that fall in value. And that's what's happening to a lot of companies in Russia right now. Because of these internal rules, whereby they're having to keep supporting the ruble by converting into rubles, they're constantly losing money. And that's coming on top of the margin pressure that we just talked about for the importers, that they're unable to be able to pass on the full amount of the fall in the value of the ruble to consumers in order to stay cost competitive. This is becoming a nightmare from a lot of companies' point of view who are doing international trade. These companies are now reporting losses, and that's putting even further pressure onto the Russian economy. So we're seeing a real trade impact, not just talking about the value of the ruble impacting Russia overall. We're talking about companies within Russia who are now suffering as a result of that falling value of the ruble. So what's the summary and conclusion today? Well, I wanted to post this video because I think the value of the ruble is a really key metric when looking at what's going on in the Russian economy. As I said right at the start of today's video, the usual situation is that if your economy is doing well, so is your currency. If it's doing badly, then your currency will falter. And what we've seen over the past 2.5 years is a fall in the value of the ruble, which is now accelerating. And what that tells us is that the last 2.5 years have been a very difficult period for the Russian economy. And one of the reasons for that is that despite President Putin's attempts immediately following the invasion of Ukraine to establish the ruble as one of the base currencies around the world, he wanted it to be on a par with the dollar, that everybody would be using it as their benchmark currency when dealing in fossil fuels. Unfortunately, from Russia's point of view, their two biggest trading partners, China and India, both refused to do that. They didn't want to deal in rubles. They didn't want to be building up large amounts of rubles or having to pay in rubles. And so they said, we will only deal with you if we can deal in our own currency. Now, clearly, that was a body blow for the ruble, because that meant that the two biggest deals that were being done by their two biggest trading partners were not using their currency. And so we've seen a fall in the demand for ruble over the course of the last 2.5 years. And actually, there is a danger now that it's becoming a dead currency, that only Russia wants to use it, nobody else is interested. And what we've seen in today's video is that the ruble has been deteriorating against all currencies. It's not just against the dollar, because when I post these videos, quite often I get comments from people saying, why are you talking about the US dollar in the context of the ruble? It's not relevant. But as we saw today, the ruble has fallen against the yuan and also against the rupee, and it's also falling against the pound and the euro and most other currencies. So that tells us that there's a fundamental flaw with the ruble right now, and that fundamental flaw is linked to what's happening in the Russian economy. Now, I've talked about this in other videos. Russia is blowing its trumpet about what's happening with GDP. GDP is something that a lot of countries look at to measure themselves to see how they're doing in comparison to the rest of the world. And at the moment, Russia is growing its GDP quite well. It's one of the top performers. However, as we've also discussed, the reason for that is because Russia has converted itself into a wartime economy. The Kremlin is sponsoring thousands of businesses to produce things for the war effort in Ukraine. That's providing a short-term boost for all of those companies. They're reporting record profits, and so GDP looks like it's doing really well. But when you look at the other metrics in the economy, inflation has been rising in every one of the last 12 months and is now above 9%. Interest rates have risen 7 times in the last 14 months and are now sitting at 19%. And it's likely that interest rates will go up above 20% at some point before the end of this year, which is on a par with the emergency level that the Russian central bank introduced immediately following the invasion of Ukraine. So the key fundamentals that we're still being provided with tell us that there are serious problems in the Russian economy. And what's happening with the ruble confirms that. And the reason I wanted to post this video now is that over the past 7 days, we've seen an acceleration in the decline of the ruble. Since the increased sanctions were introduced in June, Russia has struggled to be able to be paid. India and China are now very cautious. The financial institutions are holding back payments that should be going to Russia. And that means that Russia is now running short of cash. And the Russian central bank simply doesn't have enough money to be able to keep supporting the value of the ruble. So that potentially now has been cut, and we could see the value of the ruble going back above 100 to $1, which was the turning point previously when President Putin said, we need to step in and do something about this. This is embarrassing for Russia. The ruble is now heading back towards that level, and it will be really fascinating to see what happens if it does breach the 100 level again. Does Russia have enough money to be able to keep supporting the ruble, or has this now been put to one side? So the overall summary of today's video is that over the course of the past 2.5 years, we've seen a significant decline in the value of the ruble. That's causing problems for Russia, both in terms of its imports and its exports. Russian companies are now struggling. The value of the ruble is deteriorating rapidly. There is now a serious risk that the value of the ruble is going to fall below 100 against the US dollar again. And if that happens, it will be really fascinating to see what happens, whether or not the Russian central bank has enough money to be able to go back and support the ruble, or if it is simply out of cash. So hopefully you've enjoyed today's episode. You found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.